Hi everyone and welcome back to my channel. We've opened brokerage account, made first few trades, and I can assume it felt exciting in the beginning. But soon we realize buying stocks is actually the simplest part of investing. The real challenge begins after you buy it, because once you own a company or a small part of a company, it's no longer about pushing buttons, because there is no question now how to buy anymore. It's what do I do now? And that's where most people get lost. They stare at the price every day, trying to guess if it will go up or down today. But real investing is not about guessing. I would say it's about understanding what you actually own. So when you buy shares of a company, you don't just buy a ticker symbol. You buy a small piece of a real business, as we discussed in my previous video. That's a company that produces something, sells something, hires people, makes profit, or sometimes loses it as well. And that's what really matters. Not what's happening on the chart, but what's happening inside the company. Its financial results, its decisions, its direction. So when you start thinking like an owner, not like a trader, your whole mindset should change. You stop asking why did the price drop 5% this week, and start asking, did the company's business actually get worse or something changed fundamentally? So every serious company reports its results quite regularly. In the US, for instance, they do it every quarter, every 3 months. In Europe, quite often the companies report twice a year. And these updates are like a health check for the business. They show how much the company earned, how much it spent, whether profits are growing, and how big their debt is and the cash flow. If a company keeps making money, paying dividends, reducing debt, it's healthy. Even if the stock price sometimes drops, the business itself can be in a great shape. And that's why long-term investors don't panic when prices fall. They look at fundamentals, not at the headlines. And the most common mistake that new investors make, they chase hype. They buy stocks that are already up 200, 300% because they've seen them in the news or on some social media or sources like YouTube. But by the time everyone is talking about this particular stock, the opportunities is usually already gone. And when something unexpected happens, like a global crisis or some black swan event or just a market correction, those companies can crash hard. You can see like 30, 40, 50% within a week of correction. And that's when many beginners panic a lot. They see minus 20%, minus 30% in their portfolio and realize they never owned a strong business. They owned some story of some YouTube blogger, let's say. So if you own a company, even a few shares, it's your responsibility to stay informed. Read the updates, listen to what management says. There are quite a lot of YouTube interviews from the CEOs of the company. Then understand what challenges the company faces and where it's heading to. And you don't have to read every page of every report, but you should know the basics, like, are sales growing? Is profit stable or not? Are there new products or expansion plans? Once you understand what's happening inside the business, short-term price movements stop scaring you. You start to see volatility as something normal. and even useful sometimes, because I believe you don't buy the full position straight away. As a beginner you might, but later on I'll explain, maybe in the next videos, that it's quite essential not to buy full position straight away for your whole money what you have. And most people spend time thinking about when to buy, but they rarely think about when to sell as well. And it would be the next question for you as an owner of some shares of the company. So once you got it, when to sell, it's a fair question. So buying feels quite easy. Maybe the stock looks cheap, maybe it's trending higher, maybe it just feels right. But after you own it, the real question comes, when do I sell? And that's where company reports become your best guide, because stock prices can mislead you. If they drop 10% in a month, you might panic and sell. If they rise 10%, you might feel like taking a profit, but the reports tell the real story. If the company growing, improving margins, expanding and forecasting stronger results, why to sell it? But if the business starts slowing down, losing market share or showing signs of decline, that's when it might be time to move on. And reports also help you answer the most important question: is my money still working for me or not anymore? So buying a stock is easy, but becoming an investor, that starts when you begin to understand the business behind it. Follow the company, read the updates, and make decisions based on reality, not on emotions or headlines. And that's how you grow from just owning stocks to truly owning part of a business. That's it for today. Thank you very much for watching this video. Please hit the like button for me and subscribe to my channel if you did not do it yet. And have a great day.